Welcome to the Foundry, where leaders are forged daily. I'm your host, George Roberts. Welcome back, entrepreneurs. Today we have Marc Weisi and Gonzalo Trenosky, founders of Maple Capital Partners. Welcome.
Thanks, George. Thanks for having us.
Thank you very much.
Great to have you. Start by telling us the origin story of your current enterprise, Maple Capital Partners.
Absolutely. So Gonzalo and I met back in 2017-ish, let's call it. We had both been kind of going on along our paths in the residential space, and we both kind of had the similar goals and similar mindset, and we came across one another on Bigger Pockets of all places. And so we saw each other there posting. We saw that we were both local to the northern New Jersey area, and decided to get out to have a conversation and meet face to face. And from there, a really good conversation later, and we kind of had the idea that we would do more together and go further, faster together. And so we partnered on our first deal in that area, in the northern New Jersey area. It was a duplex, and that was kind of our proof of concept for multifamily, which was really, that was our goal, was to be able to scale faster through multifamily, as opposed to doing what we had been doing, in Gonzalo's case, flipping, and in my case, buying condos, really.
Right, and I love that. That's a great proverb. So I've seen it listed multiple ways: Chinese proverb, African proverb. If you want to go fast, go alone. If you want to go far, you want to go with a partner. So perfect metaphor for multifamily, a place where it really is all about building the partnership, building the team. So tell us about this first deal. Is this like a joint venture?
Yeah, this was a joint venture, myself and Gonzalo. He came to the partnership and he brought a ton of skills, which I was, severely lacking in, which first and foremost, he is an engineer, and I don't want to tell his whole story, but he has much more on the construction side and managing contractors and that whole skill set. Whereas I kind of brought the numbers, the numerical and analytical way of looking at a deal and assessing whether or not, there was value there. And so we put those together, and we partnered on this duplex, and we were pursuing the BRRRR strategy, where we basically went in with a hard money loan, did renovations on a distressed property, got some tenants in there, and refied out, what money we could. And now we still own that. It's stable, cash flowing property to this day.
Awesome. And do you want to tell us a little bit more about your background, Marc? So I understand you have a finance background. I personally find that to be an absolutely amazing adjunct, because really what we're doing here in multifamily, it's about making big deals. And I think that finance background comes in great and very, very handy.
Yeah, absolutely. So I started out in the financial world back in 2011 when I graduated, and started working at UBS, which is where I currently still work in financial markets. Rotated around a number of different roles there, but landed a few years back in the role that I'm doing now, which is as a trader and / portfolio manager, trading municipal bonds, so city and state debt. And so, I like to say the one kind of corollary between real estate and that is that I'm constantly evaluating different local economies, looking at a lot of the same data that us as real estate investors look at, as well as, spending most of my day in Excel spreadsheets. So kind of an Excel nerd that way.
I love it. And with that background, I'm definitely going to have to ask you about, I'm going to write myself a note. I don't want to forget. We need to talk about inflation. Yeah, those bond markets are just amazing, because of course, in case you're not aware, that's what's going to drive the entire mortgage industry. So you get that commercial mortgage, or even if you get a bridge loan, whatever sort of financing you put on there, at the end of the day, understanding those bond markets, understanding the economy is just an absolutely great cognate. So why don't you fill us in a little bit, Gonzalo, give us a little background on yourself.
Absolutely. Thank you for having us on, George. So my background, I think just as equally as important as the finances regarding multifamily is really the construction and kind of like the CapEx experience. So I bring that to the team. The last 17 years has been in pretty much the private sector, doing large infrastructure project in the Northeast for big and small construction, consulting and construction engineering firms. And basically, I feel like it's a good combination, especially us as operators. When we want to purchase a property that requires a lot of value add component to it, I bring in my expertise as far as providing a good CapEx budget, developing a CapEx budget, and then kind of implementing that strategy throughout the whole period of the property. So that's what drives me every day, to see something being constructed, improving the lives of the tenants as well, and just adding a tremendous amount of value in the property itself and every project that we pursue.
Yeah, I love it. I think, again, construction, that is another amazing cognate, because a lot of people, they do pursue these value add projects. And again, you got to bring in a general contractor. If you're not skilled in construction, wow, you can make some pretty big missteps. So great that you have that. So walk us through the story. You guys, I think you had probably some single family investments, et cetera, go through the progression, you pair up, you're doing this duplex. So what other sorts of things are you doing or pursuing now?
Yeah, so after that duplex we got, that gave us the proof of concept that, multifamily is the way to go. We had, in that case, it was really only 2 tenants, but still, that versus the single family stuff that we're doing before, you have 1 tenant leave, at least you still have 50% occupancy. So we kind of extrapolated that out and said, okay, well, how can we go even larger? Because obviously that's, more tenants, less individual risk, less tenant risk. And so we started to look at the multifamily space. We ended up participating as LPs on a deal in 2018. And that was in a nearby market, in the Philadelphia market. And that was a real learning experience for us. I would say, not in a good way. We looked at that deal, and this is before we knew about multifamily syndication and how to vet a sponsor and things like that. But their business plan was basically short-term rentals. So they were taking over buildings, distressed assets, and putting in place their business plan of doing Airbnb and VRBO and all that stuff. So that deal ended up going sideways over the course of the next couple of years. And we actually had to, while we were passive investors, we ended up having to take over the asset from the GPs and kind of stabilize the asset. So that was a big eye opener for us. It was also, frankly, it was really frustrating as we were going through it, and a lot of sacrifices and late nights and things like that. But at the end of the tunnel, we came out having the confidence that, okay, we can definitely do this. If we start out underwriting conservatively and we're in charge, we built the confidence that we would be able to deliver returns to our investors.
Yeah, wow. Talk about having a great cognate. That Airbnb Verbo short-term rental is an amazing thing. Something you can absolutely do in the multifamily space to bring additional income. So I don't know how much you can tell of the story. Maybe you can't tell the story of how you ended up having to take it over, or some of the competency that you built in that field. What can you tell us?
Yeah, I would say first and foremost, the I guess credo of all syndications is you vet the sponsor before you look at a deal. And so that was something that we didn't know at the time. And so we put a lot of emphasis on looking at the deal and how the numbers made sense, and less so, of an emphasis on the actual sponsor, their track record, and everything like that. So basically what happened, and it goes back to the old saying that you hear a lot in multifamily syndications, is a good sponsor can make a good deal out of a bad one, and the opposite is definitely the case as well. So we ended up having to come to some agreement with the general partners that we would take over. We've been running the asset ever since, and thankfully we're kind of rounding out the year here and then looking to exit that in the next year. But that experience taught us a number of things. First and foremost, kind of what the not to do's on the syndication side, and we built a lot of confidence through that. Also, we built the trust of the other LPs that invested alongside of us. So it ended up, I won't call it a blessing in disguise, but it ended up being a good thing after we were able to turn this thing around.
Yeah, I love it. You bet on the jockey, not the horse. And that's quite a story. I've heard of a lot of the LPs, they offer their services and they look at it like an internship, but wow, did you ever take that to a new level there? So, okay, take us back a minute. So the JV, what year are we in there?
That's 2018 or so, late 2018.
Oh, okay. So this came fast on the heels of your joint ventures. Yeah. You had the joint venture. Then you have this limited partnership with short-term rentals that you ended up taking over. And then where did you go from there?
2019 is when we started studying multifamily syndication in earnest. We had come off the heels of looking at that experience and saying, how can we do this, and how can we make sure that no investor is ever in our position that we were in? And that's kind of how this all started. Was we didn't want others to fall victim to, not knowing what they don't know. And so we started, the education route. So we started to join some mentorship programs, educate ourselves through webinars, podcasts like yours, and just really anything we could consume. And then from there, we started to look out to build our network of sponsor teams and other team members in the markets that we're looking at. We had a couple of false starts, but around 2019, late 2019, our mentor at the time and still a close friend was able to bring us on as a co-sponsor on one of their deals. So we helped them out, filled in some pieces on the capital raising side, some investor relations side, and that gave us, again, more confidence to be able to say, okay, we can do this, and take the next step.
Great. I love it. And so that sounds like that's your current deal right now. You've got the short-term rental is still going, looking to exit. And then you've got this 2019 co-sponsorship.
Yeah, exactly. So 2019, 2020 was a couple of co-sponsorships. And then 2021, this year, was when we finally closed on our first true lead GP deal, which is a 32-unit complex in Louisville, Kentucky.
How many?
32 units.
Okay, 32. And that's an interesting market. So I happen to know a little bit about Louisville. I just got back from, what was it? I can't even tell you, Jake and Gino, an amazing conference. And, they actually got out of Louisville. I think there was some regulations they didn't like. Do you want to talk about that? Like what's been going on in the Louisville market, and tell us why you like it?
Yeah, absolutely. And I think I caught wind of them being out of that market. I think they're a little bit bigger on Lexington and maybe some Florida markets. But as with many large cities, especially during a lot of the social movements that have happened during COVID, they've started to reevaluate regulation, housing regulation, and things like that. So I won't go into the specifics, but just suffices to say it's a lot of the same sentiments that are happening in a lot of the larger cities as kind of this wave of populism and inequality and things like that are starting to bear out in terms of regulation. We thought that in the location that we bought this asset and for the tenant base that we are looking to have in our property, it shouldn't affect us in the long term.
Yeah, well, good to know that. And I do think that Louisville is a great market. You've got a lot of things going for it. It's gateway to the Midwest. You've got the Bourbon Trail out there. It's a good rental market. I know you have more than the average number of renters out there, which already is in your favor. I know they bounced back like crazy. Number one city in terms of bouncing back from COVID. Birthplace of Muhammad Ali. What else? We got Louisville Slugger. What else can you add to that list, Mark?
Yeah, second largest cargo airport in the world, which I was surprised about. I didn't know that prior to initially looking at that market. So UPS Worldwide Express Hub is there at that airport. It's got a ton of eds and meds, with the University of Louisville there, a few other large healthcare, Fortune 500 companies based there. So it's got a lot going for it. I would also say affordability is a strength. The average rent there is pretty paltry when you compare it to nearby markets in the Midwest. So definitely, highly affordable.
Yeah, great. And I know another great multifamily investor, John Kasman. Look for him on an upcoming episode to be released of the Foundery. Just loves the market of Louisville. He loves the lower north and the upper south because, as he describes it better than I could, that you've got this basic strip of the country where things aren't too crazy, right? It's not getting as appreciated as the coasts or some parts of the South. It's not like, Texas, great market, by the way, people are moving out to Texas. But again, you don't see the highest of the highs, the lowest of the lows. It's a bit more stable.
Absolutely. Yeah, it's definitely not, it doesn't make a lot of the top 10 lists that you see every year. But that being said, when you look at the graph of kind of price performance and rental performance, it's been a steady kind of uptick, even throughout the '08 recession. So it's kind of one of those, I guess, safer, not going to be as volatile, what we would call in finance, lower beta type markets.
I love any podcast where we get to mention beta. So yeah, that's obviously the Greek that refers to volatility,
Yeah.
which is one measure that people use as a measure of risk, reasonable to a degree. I do prefer Warren Buffett's explanation that that risk is not knowing what you're doing.
Absolutely.
But volatility, of course, brings with it its own concerns. And maybe with that, we could just merge into the question of inflation. So what do you think is going to happen on the inflation front, and how will that impact real estate?
Yeah, I don't have a crystal ball. I'll be the first one to say it. I am not an oracle by any means, but I do have the benefit of looking at this stuff, throughout the day in my W-2 job. So I would say where I come out on it is, I think inflation, just like other people, I think it is here to stay. Thankfully, though, I think it's the lesser of two evils. So the Fed really has two things that they have to contend with. It's either runaway inflation or deflation. And I think with the current tool set that they have, I guess less risky issue or risk for them is really inflation. They can raise rates, they can implement other forms of monetary policy, forward guidance, and so on. They have more tools to combat inflation than if demand were an issue or oversupply, whatever the case may be. I think inflation, like the numbers that we've seen more recently, I think will end up somewhat moderating as the supply chain worldwide comes back online. Unfortunately, just at the time when we're coming out of COVID and people are starting to buy again and go out again and socialize and things, it's like, a lot of these factories and a lot of the global supply chain has been hampered. So it's kind of a, perfect storm of inflation. I think some of that will subside. And I hope that by this time next year, we're looking at closer to 2% as opposed to, north of that where we are today.
Yeah, well, let's definitely hope so. I'm afraid this time we don't have a Paul Volcker to save us with our debt where it is. I don't think that we can see those interest rates we have seen in the past. But wow, definitely brave new world. I feel
one
better.
thing that I kind of, George, on the inflation portion. I mean, I see it pretty much every day because my portion of what I'm doing now is buying a lot of construction material for rehab projects. So I mean, just look at the lumber cost. It might be more short term with the lumber cost, but right there you're seeing like a doubling of cost. So that right there is a major hit to just any project that you're trying to do for any capital improvements. Just the lumber cost itself, plus just general material costs.
Yeah, absolutely. Being in the construction industry myself, I feel you when you talk about lumber prices and things like that. I mean, if it's hard to make projections in the value add multifamily space, I mean, when you have to buy all the sticks and the bricks and you have to project where things are going to end up at the end of a project, say for a spec home, wow. This is a very difficult time to be a builder. But again, I think a lot of opportunities, and I see in some ways even greater opportunities, especially for commercial real estate, or for those of us who are in some degree buying and holding, even in a syndication. If inflation really catches fire, and it looks like it is beginning to do just that, we're going to be doing, I think, a whole lot better in terms of cash flow than just about any other asset class.
That was going to be my punchline to this whole thing is, inflation, while it is a worry for most everybody who owns assets, for us as multifamily investors, we have the benefit that we have kind of an inherent inflation hedge. Theoretically, as inflation, top headline inflation goes up, you would think that wage inflation should go up as well. So that means your tenants, your residents, and your properties should be earning more and therefore able to pay higher, rents. That's not even talking about the long-term demographics that I think will drive more rentership into our assets. And obviously, we've had a kind of a dearth of supply for the last 10 years. So I think all signs point to continued appreciation on the multifamily side. But I would just, caution, obviously, you always want to underwrite conservatively.
Yeah, I love it. Absolutely true. And considering that there is inflation on all fronts these days, the fact that the housing supply is so constrained, again, I think we can probably expect to, I hate to say benefit, because these are very difficult times.
Yeah.
But without a doubt, I think we're definitely going to be sitting much better than people who don't possess those hard assets. Well, let's pivot a little bit into sort of the entrepreneurship part of the podcast. Tell us about what do you think should be the next great big step for Maple Capital Partners?
I think if you don't mind, Gonzalo, I'd like to, we hadn't talked about this prior, but I think my great next big kind of obstacle or next big step for us is really Gonzalo is going to be transitioning from his W-2 into doing this full time. So I think that's going to be a huge step forward for us in terms of the amount of focus and emphasis that he can put on this business. And then I hope to, eventually wean myself off of my W-2 and also focus on this full time as well. We both are enamored with multifamily. As you can tell, we love talking about this stuff. So the more time we can spend looking at deals, talking to investors, talking to brokers, I think the better.
I love it. That is an amazing and beautiful step. So congratulations on you two, Gonzalo, for being ready to take the step, and Marc for preparing. And it's hard, right? Because as a trader, you are in the finance space, probably very heavily compensated. It's not like walking away from, some more ordinary job.
Absolutely. Yeah. It's sort of like a drug in some ways, you get used to this and, your money coming in and things like that, and the stable living and the comforts that allows. I guess we'll see where the future takes us.
Right. Yeah, I'm sure that many of our listeners here have been reading Jake and Gino. So it's been described exactly as a drug. That drug is money. And in the book, the metaphor is honey. So very, very close to top of mind because I've been reading that book. But yeah, not easy at all. The world of entrepreneurship is difficult. It's not for everyone, and very difficult to turn that side hustle into your main gig. And so congratulations on doing it responsibly. Well, since we are talking about books, how about this? Why don't we ask both of you, Marc and Gonzalo, what are some of the books that have helped to forge you as a leader and as an entrepreneur?
Dail, you want to go first?
Yeah, one book that I believe I read last year, it kind of helped me kind of organize my finances a little bit. It may not be exactly real estate related, but it's a book called Profits First. And I can't remember the author off the top of my head, but it's a very good book for kind of setting aside different pots in bank accounts in order for you to kind of manage your income coming in, your expenses going out, as well as just kind of keeping a tight lid on your financing. We actually incorporate this same technique in this recent purchase that we did in Louisville, where we kind of divided the bank account into two separate pots. The one pot was the CapEx pot, and that's the one that really myself and my partner Don, that are in charge of capital improvements, are able to hold on to that money and know that this is what we have to complete these capital expenditure projects on this specific property. So it allows us to kind of segregate the two and be responsible for our portion of that capital that's raised for the CapEx. So that's a pretty decent book for anybody interested.
I think something that we're both big on is personal finance and financial freedom and all of these aspects. So that definitely falls in line with that interest. On my side, I would say one book that kind of fortified my mindset on entrepreneurship. Obviously, there's Rich Dad Poor Dad, but I think a book that does even a better job from Robert Kiyosaki of fleshing out what that actually looks like is the Cash Flow Quadrant, and that's a really, really good book for anybody who's really read the Rich Dad Poor Dad and enjoyed that. I think that's a logical next step in terms of what does that actually look like.
Yeah, and I love that. I love both those books. So first, Profit First by Mike Michalowicz, outstanding in terms of making sure that you have the appropriate discipline. And again, it does come from separating things into different accounts. And again, realizing that if you keep the money around, you're just going to spend it. So you've got to make sure that you're taking a disciplined approach to what your CapEx budget is, maintenance, et cetera. And then Rich Dad, Poor Dad and cash flow quadrant. I love the fact that in my area, you can actually go to, I would say that I think they are real estate meetups. I think they're real estate focused because, of course, Robert Kiyosaki, we're talking about somebody who is very real estate focused, although he does write for a general audience. They actually play the game. That's the meetup. They go to different cities and they play the game. So it is a great game. I have played it. I played it in Orlando. Went out there to visit one of my acquisitions and to look for some more. And it's a fun and quirky game. He's trying to turn Monopoly essentially into three-dimensional chess, and very quirky, but again, it's an amazing game. And I think the game is of the same name as the book, the Cash Flow Quadrant, or Cash Flow. Maybe it's Cash Flow.
Cash Flow, the game. Yeah, actually, I think it was last Christmas or so. I bought the game for Gonzalo has 2 young girls, and so they have a kids version of the game. And I think I'll let him tell the story, but I think he's been getting some enjoyment out of it.
Yeah, Cash Flow for kids. We're really big into kind of instilling financial literacy into the young people, and I think the best way to start is with your kids. So that Cash Flow for Kids is a great way to kind of understand what assets and liabilities and how they work to kind of grow your wealth.
I love it. I usually save the question for a heartwarming entrepreneurial story for the end, but my heart is already warm. So thank you for that, Gonzalo. Maybe with Christmas coming up, who knows? We may see that game in our household. Don't know.
There you go.
Might be. So then tell us about what lights your fire as an entrepreneur. What really keeps you going? I mean, this is, as you guys mentioned, this is a hard road. It's easier to stay the W-2 slog. You get a paycheck every week. Your health insurance is paid. A lot more uncertainty here. So what really keeps you going?
Yeah, I think on both of our sides, we have very similar kind of whys. Gonzalo's in a little bit different situation with, having children, but I definitely hope to one day have some children. I think for both of us, it comes down to, being able to chart our own course. We saw, just like many other people that grow up in the States, you're kind of pushed along this path of, going to school, getting your education, whether that means advanced degrees or undergraduate, and then you go on to the working world and work in corporate America for 30, 35 years, and hopefully one day retire and you've got enough saved up in your nest egg to truly live when you're at your, the dawn of your life, the dusk of your life. So that wasn't that appealing to us, I think. And so we kind of both have the similar goals or similar whys of time freedom, really to spend time with who you want to spend it with the financial freedom side and what that affords you, being able to spend what you like to live a life that, of the quality that you want. And then for me, locational freedom, be able to up and go, anywhere I want, if I want to, or as I see fit. So just freedom.
Yeah, great rundown on the freedoms there, Mark. I know some days I feel like even if, hey, I'm working on real estate and I can hardly even get out to a restaurant. You know what I mean? One of my favorite things to do is just get out to Olive Garden and I can have that soup and salad all morning and just make meetings, etc. But you know what? Talk about geographical freedom. I am literally chained to this desk, how busy I am. Can't even begin to tell you. It's ridiculous. So people forget sometimes about that geographical freedom. And that's just amazing. When I hear about entrepreneurs, investors who are able to go out and just live someplace else, even if it's for 6 months out of the year, just amazing.
Yeah, and that motivates a lot of what we do too, by the way, in terms of trying to really systematize our business to the point where, if one of us were to be out of pocket for a week or so, the business would largely run itself. We would have the team in place to be able to run the business. And so that kind of informs the way that we want to structure our business going forward.
Yeah, I love it. Cash flow is very important, obviously, way better than having to deal with reserves. Well, actually, talk about my 2 favorite things. Having reserves is my second favorite thing. But again, having a cash flowing asset is a lot easier to manage. Not like, say, a construction project where it's just an alligator up until you either get the property financed, like I'm doing residential, so construction permanent, or if it's a spec home until the very last day. I'm telling you, cash flowing real estate is an amazing thing.
Absolutely.
So how about some advice either for a new entrepreneur or advice for your younger self?
Yeah, I can jump in there. If I were to give advice to my younger self, I would kind of definitely would say spend less time watching TV and more time kind of educating myself on just overall financial literacy, as well as just getting more involved with networking of sorts. Networking is very powerful, and I don't think I did that enough starting off in the beginning. And I feel like if I did start off 10 years ago with networking, I think I'd have such a vast group around me that I would have versus what I have now. So I think networking and definitely educational financial literacy is probably something I would tell myself, my younger self.
Beautiful. And you, Mark?
Yeah, that kind of actually, when you asked about books, I had one in my head that I forgot to mention, Who Not How. And it kind of goes right in line with what he was saying there. In terms of telling myself, I mean, there's some overlap there where I definitely subscribe to the idea that you're the average of the 5 people you spend the most time with. So, whether you call it a mastermind or a club or just your advisors, spending time with high quality people that, you aspire to be like in whatever, meaning that has. So if it's your business, having the 5 people on your phone that you call the most being people that are already doing where you want to be. And so that's one thing. I also think that seeking out coaches could be a part of that as well. So I think oftentimes in early on, I was hesitant about, paying for a coach, paying for education. But what I saw and what we saw was really you end up paying for that coaching one way or another. Either life teaches you it, in which case it could be, the downside is very real and could be, much larger than it costs to pay for a lot of these coaching programs. So I would say get started with a coach earlier and surround yourself with high caliber individuals.
Yeah, so much to underscore and extend there, Mark. I'd just love to amplify that with a quote. They say a smart man learns from his experience. A wise man learns from the experiences of others. And that's what I think of when I think of education. Absolutely. And going out and finding those masterminds, going out and networking, those are 2 amazing things. I decided not to go the guru route. So I never paid a guru to get me through my first deal, my second deal, my third deal. But what I have found is that by working through a mastermind, which eventually became my company, Horizon Multifamily, and we eventually ended up doing actual deals, setting up an LLC, literally became a going concern. This was amazing for me. So I avoided the guru thing. Coaches can be great, though. I did eventually get a coach, Charity Brown, if she's out there listening. Her ears are ringing. So I did eventually get a business coach. But again, you need to do something, whether it's pairing up with people, partnering up with people who may be a step or 3 ahead of you, or getting a business coach, getting a real estate guru. Problem with those real estate gurus, they can be very expensive. So and again, say you avoid one mistake with your real estate guru, bingo, you more than paid for everything. But again, that can be a very expensive route. Some people will get into that and they say, hey, I didn't get anything out of it. They just pushed me to go a little faster. And then boom, I'm in the same place that they felt that they would have been. So caveat emptor, definitely keep your eyes open. I wouldn't go with the first coach or guru that comes your way, but keep your mind open.
Absolutely. And that could take many forms too. I mean, you could come onto a more experienced general partners team and help them out in some capacity. And, in many ways, that's like coaching. You're learning actually in practice, on the job. So what's better than that?
True that. So I guess we'll start to wrap up the interview. Guys, do you have any questions that you have for me? Would you like to turn the tables, or if not, we can just ask the final question and head out?
I'd like to ask you a question, George, if you don't mind.
Sure.
I wanted to find out where do you see yourself being in, say, 2-3 years? Are you still working? You plan on leaving your full time? Like, what's your 3-year goal?
So in terms of this being a side hustle versus being 100%, I don't know that that's necessarily within my 2 or 3 year goal. That's not a question I have worked out. In fact, we live in a day and age where most people stay at their W-2 for maybe 3 years. And maybe it's been a little longer since the pandemic, et cetera. There's been a lot of dislocation. But where I say I see myself in say 2 to 3 years, really expanding this business. I see the podcast taking off. I've already got a VA. And so I want to grow the team. So in 2 to 3 years, I'm not one of those people. I do write down goals. Like, yes, I want to have 1,000 units under management by February of 2022. So if you're talking about those goals, like people say, write your SMART goals, I do believe in that. But what I believe in more than that is taking the massive action. And what I do every day is how do I grow this thing? And for me, that's all about, it's about hiring people, hiring the right people, growing the business. And for me, it's all about team.
I love that. Yeah, I definitely that resonates with me in terms of the goals are important. It's great that you're getting them on paper, but they're only important it's so much as they prompt you to take action every day, you know? And so that's really what matters, is who you become along the way, what habits you pick up and routines that you do in order to achieve those goals is way more important than having, you know, something pasted on your wall, basically, that you look at every day.
You know, I love that. And again, I do believe in goal setting, but I believe that it's not about reaching your goal. It's about becoming the sort of person that can reach that goal. That's the real reason why you set the goals. Somebody said that before me, and I wish I could quote it, but that we'll chalk another one up to unknown. And yes, it's exactly, it's all about personal growth. The goal is not about whether I get 1,000 units. Maybe I'm at 2,000. And what did I say, 2022, actually, I think it was supposed to be February of 2023. But again, the idea is not whether I'm at 1,000 or 2,000 or 5,000 in February of 2023. The idea is that every day that I've taken the sort of steps so that I can be that sort of person and hopefully blast that goal out of the water. That's my real goal, is to make big goals and then to just destroy them.
Awesome. Super inspiring.
So then I think that we have to wind this down somehow. So I'm going to send you out with my favorite question, which is, send us out with a heartwarming story from your entrepreneurial journey. Who wants to take this?
You got anything in mind, Gonzalo?
I was just gonna, I guess, relate back to maybe some of our obstacles in the past that for me, and I think it resonates with Marc also, is that, you know, we've had some pretty big falls from starting off, you know, 2-3 years ago. And I'm just happy and glad that we were able to kind of overcome those pretty big, you know, I guess, losses and kind of learn from them rather than kind of sitting back and be like, oh man, we should be doing something else. No, we learned from them, we picked it up, and then we moved forward and we did that. And now, you know, we recently closed on our first 32 unit syndication, successful close. And I think I'm just very proud of where we are right now, especially looking back as to some of the negative and obstacles we had to overcome the last 2-3 years.
Yeah. So I love it. Just get back on the horse. I think that's got to be the number one best lesson that any successful person has to teach you, that it's really about how quickly you get back on the horse, how quickly you restore the rhythm when something shakes you. Absolutely beautiful. Thank you so much, Gonzalo. Marc, thank you for coming on to the Foundry.
Thank you so much for having us, George.
Thank you, George. It was a pleasure.